go to our first email. This one, do you think Wesfarmers will likely chase more acquisitions in light of the Coles spin-off? And look, having a look at the Coles spin-off, I guess with Wesfarmers, Coles tied up a lot of the capital. It tied up 61% of the capital, only responsible for 34% of the earnings. So what is Wesfarmers going to do with the new capital that they have? I might bring Michael into the conversation as well. There's a bit of a debate going on whether that reinvestment is going to be into the Bunnings UK, or whether they should give up on that experiment already, or whether we're going to see more investment into the industrials part of their business that has been performing well, the chemicals, the fertiliser, that type of area. What are your thoughts?
Look, it's difficult to say. I think there'll be a bit of a combination of organic growth, just sort of focusing on the current businesses that they've got, which are growing at very good return on capital rates. But there's also the opportunity to make investments if the opportunities present themselves. You can't just go and acquire businesses just for the sake of it, but I think they'll be patient. Wesfarmers has historically prided themselves on being good asset traders, and they've pulled one off here with Coles. It's worth noting that although they're going to still have 20% holding in the Coles business, that's not going to be in escrow. So if they do need further capital at some point down the track for a large-scale acquisition, they can also tap that. But I think for now they'll probably focus on the core businesses that they've got, so the Officeworks, the Bunnings, maybe some of those industrial assets as well, and then they can look for opportunities as they present themselves. But it's time will tell, I think.
I mean, Michael, the experience of spin-offs in the past is that, you know, there have been good experiences for shareholders. There's been a couple that haven't done so well, but on the whole, you know, they tend to create value. What do you think?
Yeah, we've seen a few in recent years, sort of S32, Clydesdale Bank, they're sort of two that jump out. Look, I had Wesfarmers as a sell on a different sort of program here on SkyBusiness last Monday, but that's obviously had a big change. If you look at the share price for Wesfarmers, it's been range-bound for 5 years or so, with an upside of $44, a downside to $38. But as we sort of touched on in the intro, a bit of financial engineering can go a long way. And I think by breaking the business up into sort of a more mature, slow-growing type business in Coles and then focusing the more growth assets in another entity, you might see the market start to re-rate this one high. I'll be holding off, remaining fairly neutral, although I do much prefer the new Wesfarmers model without Coles in it, because I think Coles has probably reached a peak, and the competitive pressures, not only from a resurgent Woolworths, but the international players will continue to eat away at the margins of that business.
Great points there.